Esteemed panelists, dear audience, thank you very much for joining us again for another BMCP Live. We're talking about tokenization in 2021 and unifying the ecosystem. And we have some excellent people, some excellent CEOs and founders from this ecosystem actually around the world today. We've been looking back at a very special start of the 2020s with a very special 2020 where I think at least the thing with the webinars and the online panels took off, and we all get very experienced in doing those. And we have still, I think, great reasons to join together and talk about our industry, and that's what we are going to do today. And I'd like to start with a round of introduction, and we start with the gentleman that's already at, 10 p.m. Hong Kong time, Mahesh, Harilela. Thank you so much for joining us at this a little bit later hour in Hong Kong. You have a very special background. So you come from a very traditional industry. You're both an investor and now an entrepreneur in our space. Give us a little bit of insight. So what do you do? What's your background, and how did you come into the space of blockchain, crypto, and digital assets?
Christian, thank you very much. BMCP, thank you very much for having me today. It's an honor and a privilege. I'm still never used to webinars. I like face-to-face contact, hand-to-hand shakes, and just meeting people so I can learn a lot more. Thanks for having me. It is 10 p.m. It's past my whiskey hour. I'm very, very happy to be here with everyone. Christian, to answer you very short and concise, if I could. My family's been in Hong Kong since 1930s, late 1930s. Hong Kong is very much our home, although I'm not Chinese, but Hong Kong is very much part of my life and part of my family's life. We started off as traditional businesses in whatever trade that we were involved in. And in our case, it was really tailoring. And with everybody in Hong Kong, property was a very interesting aspect of business. So we started investing into properties in the property market, which was just a little backwater in China, which belonged to the British colony, and started building our asset base in Hong Kong. It wasn't really until mid-70s that the family decided to branch into the hotel business. So when we looked at our property focus, and this is my father and his 5 other brothers, when they looked at the property business, the property aspect, the focus that they looked at was really the hotel industry. So from 1975, through hard work and going public and then delisting and becoming private, we built a group of about 19 hotels within Asia. We have in London and we have in New York as well. So this is all these properties are 100% family-owned assets. As with all first generation, the succession planning is always something of difficulty when you have 6 families that have their own offspring trying to develop. I decided to really look at things which were alternative and different from what is the property business. I've always been involved in environmental and social sustainability programs. In my younger days, when I was still 29 today, 30 years ago, I was always an early adopter. I positioned myself as an early adopter. In social sustainability, I looked at projects, and I was introduced in 2016 to blockchain. Never really understood it, didn't understand Bitcoin, didn't understand anything about tokens and cryptocurrency. But right after being engaged by a company that had me look at their business, and it was really the business that caught my interest, and understanding how blockchain could be a part of a business, it actually tweaked my interest. And then now we have branched into the point where we have labs group, where we actually have blockchain, we have properties on blockchain. To me, this really resonates with sustainability, trackability, traceability, relationships where the investors can actually understand where they're putting their money and take ownership without having any intermediaries. So to me, the aspect of learning blockchain, learning about cryptocurrencies, but the fundamental foundation of business still has to be very, very important. So my role in the creation with labs has been to ensure that our corporate governance is on par with traditional businesses, that whatever we are positioning in terms of our proposition of a business has to be a viable and sustainable business. So for me, this is really a very, very interesting change where we look at a value of what is a crypto asset that actually can attach to a physical asset, and then the physical asset being a $228 trillion industry globally. This is really something that has put my energy and effort into ensuring that this can succeed. So I hope that helps explain my position.
Thank you very much for the insight, and we'll come back to labs in a short moment. I'd like to continue the international journey to Abu Dhabi. And before I give Richard the word to introduce himself, to the audience shortly, on the bottom of your Zoom window, you have a Q&A functionality. You actually have chat and Q&A, and we'd encourage everyone to use the Q&A function to shoot question at us, and a little bit later in the panel, we'll come back to those questions, or we try to fit it in where it fits into our conversation. Richard is, well, I could say, Richard, you're a regulatory guy. You're dealing with the frameworks and regulation and compliance. Please introduce yourself. What have you done in Abu Dhabi, and what's your perspective?
Thank you, Christian, for that. So I'm the CEO of Financial Services Regulatory Authority at Abu Dhabi Global Market. It's a very new international financial center. So you're right, but in terms of me looking after regulation and compliance, but more importantly, we also look at the entire ecosystem and what is needed to really grow a vibrant ecosystem. The journey started about 6 years back. Abu Dhabi Global Market, ADGM, is a very new international financial center that started operations in October 2015. Right? So when we first started, it's really blue skies. We are thinking, because we are pretty late in the game in terms of developing an international financial center, what can we do very differently? And one of the key aspects of what we're trying to push at that point in time is pushing for digital economy, digital financial services, and how do we embrace fintech? Of course, there are other pillars of growth, including sustainable finance, but just let me focus my attention on fintech and that whole area. So we built the first regulatory sandbox in the Middle East and Africa region. By now, it's the second most active sandbox after the UK FCA sandbox globally. And from there, we conduct a lot of experimentation into areas of not only blockchain, but also areas of wealth advisory, like robot advisory, etc. Because we do regulate across banking, insurance, and capital markets intermediaries. So we have done many things, setting aside the regulatory sandbox. From there, because of the ability to get up close and personal, working with entrepreneurs, working with the industry, we are able to develop tailored regulatory framework that caters to the industry needs. So for example, our crypto exchange framework is one of the most comprehensive globally. We have friends from all over the world that look at our framework and think that this is a very sensible way of regulating the crypto exchanges, because we don't only focus on AML KYC risks, but we started to look at what is needed in terms of technology governance, what is needed in terms of market surveillance, to make sure that all these exchanges are adequately run, in order to assure the institutional investors that their assets are being protected. And because of that, it has gotten a lot of traction. So that is one. And of course, in the tokenization space, we do have very good players coming through to us. For example, Securities, which is a US firm that WisdomTree has invested in, is based in ADGM, and they do tokenization of assets, of ETFs, etc. And now we are doing cross-border experimentation between the US SEC ourselves and the Australia Securities Investment Commission on compliance token, where products can be offered cross-border. It can be coded to make sure that it complies with the rules and regulations of each jurisdiction is being offered to, right? So that then open up the universe of markets for all these different players. Products can be offered in a cross-border jurisdiction in a much easier fashion, getting liquidity, making sure that they are compliant by nature, and reducing the costs of client acquisition. So we are doing quite a lot of experimentation on those fronts.
Well, thank you very much, Richard. I think it's a very important point to try to make blockchain and tokenization work cross borders, because we as a regulated financial services institution in Germany, we see that every day, that issuers come to us and ideally they would like their offering to go out to the whole wide world and basically offering to everyone. And of course, capital market laws are fairly national, and it is complicated when you get into the details. So we have the view of both an entrepreneur and an investor from Hong Kong, and now a regulatory view from the Middle East. I'd like to bring our European guys in and talk platform, exchange, and custody. Let's start with Luc in Luxembourg. Luc, the two of us, we've been working quite closely for the last years of the Black Manta journey. Can you give the audience a little bit of insight? So what does Tokeny do, and what's your take on the market? Why, maybe first one, why hasn't tokenization really yet taken off as we are all expected and working towards it?
I think tokenization has started, but not for securities yet. When you hear about NFTs everywhere, this past few weeks, it's tokenization of assets. But tokenizing securities, it's a bit more complicated because you have a lot of different regulations that you need to apply, a lot of constraints, and all of these rules are made to protect investors, to avoid the craziness of ICOs or NFTs. So it's coming, I think. The real world asset tokenization is coming. We have the technology now to make it compliant, to control everything. What is missing is mostly education and the legal framework. It's not easy to issue securities, and now you can tokenize them, but you have new questions coming with this tokenization of securities. So a lot of work has been done by regulators the past few years, especially in Europe, in Asia. So now everybody recognizes security tokens as securities. We have this legal certainty for big financial institutions, so now they can tokenize with less risk, but it's still the beginning. So I think it's coming. On the technology side, for the last 3 years, we are building this type of technologies. So we use the public blockchain, permissionless blockchain, for the interoperability, for the resilience, and so on and so forth. But you need to control what you do, because finance is centralized. You need someone who is responsible. You have rights and duties. So we had to create the full framework to be sure you can issue security tokens that you can control and that fit with the existing regulations. So it took a lot of time, and I think I'm pretty convinced that when the secondary market will emerge, the full value proposition of security tokens will appear. So that's why it's great to have people like Archax or other solutions based on bulletin boards emerging very soon, to be sure the liquidity can be there, at least can improve in comparison of what we have today in private markets.
Absolutely, I think that's already the perfect handover. We're looking to London now. Graham, great to have you also. So you had this experience last year when you got approval for your secondary market from your regulator. I guess that was a very happy day. I remember how that was for Black Manta back in 2019. So tell the audience, what is Archax about? What are you trying to do, and what's your perspective onto the market in March?
Thanks, Christian. Yeah, thank you, and thanks for having us as well. I guess you know, we started back in 2018 with a view that this was coming, that tokenization was coming to the market, and actually, you know, as Richard and Luke have alluded to, it's, you know, filled with regulation, and actually the way that people trade regulated securities is through a trusted platform. So we kind of had a vision that the way to help the market develop was to put a platform together in London with FCA regulation, which would help the market develop. And we achieved that at the end of last year. We became a regulated MTF custodian and broker in London, as well as the UK's first crypto asset firm. So, you know, we kind of have the regulatory base to build off of, and we think it's coming, and we think all securities end up here as well, but we're still really early on. I mean, you know, Luke and the Tokeny team and the likes of Securities are, you know, ahead of the game, getting the primary issuance kind of done, but you need secondary markets to trade it on, and almost every time someone takes it forward, you reach new barriers. So we're at a point now, I think, where people can easily create tokens. We can understand how they can move about in private markets, across bulletin boards. And when you come to liquid secondary venues, you then start introducing a whole new world of problems with CSDs, clearinghouses, and the like. So I think we're getting closer to solving a lot of the problems. And as we solve more, we'll start to see more and more traction. There is interest in security tokens all the time. There have been successful ones already, but I think the quality that we're seeing approaching us now, talking about tokenization, talking about how do they get liquidity, how do they bring an offering to the market, is increasing. So I suspect this will still be a slow year. I don't think this is the year it comes to bear. I think we develop across this year, but I think at the end of this year, you'll start to see real traction taking place, especially, you know, when the likes of us and others start coming to market.
Well, yeah, thank you, Graham. I think definitely also from a Manta perspective, when you look at the last 3 years, the projects we've been looking at recently have changed a lot, and there are coming other issuers, other players into the market that want to offer a security in a tokenized form, and that is definitely a very positive movement. Also on the investor side, what kind of institutional and professional investors now looking into the space and get ready. And one thing they have to get ready and prepped with is they need some kind of solution to store that new kind of asset, because as of now, they give that to a private bank and the private bank takes care of it. But now these institutional professional investors, and basically anyone who invests in a security token, needs a wallet. And there we are with custody. And just to complete our panel, last but not least, Martin from Munich, my fellow German, please introduce yourself shortly. What are you doing at Tangany in Munich?
Yeah, thanks, Christian, for today's invitation. So my name is Martin Kreitmair. I'm one of the managing directors at Tangany, and we're a Munich-based or Germany-based crypto custodian. We started 4 years ago with the goal to simplify the usage of blockchain. Back then, a lot of people have still used MetaMask and other non-custody wallet solutions. And we have seen that blockchain is very complex and started with the aim to simplify the usage of it. And from there on, a lot of new things have evolved. And since then, we have evolved into a custodian, a regulated custodian as white label solution, which means we help companies or partners to integrate our solution into their solution, and to generate wallets, to safekeep digital assets, but also non-regulated assets, and to communicate with different blockchains, started with Ethereum, but I've seen recently demand and requests for other solutions like Polygon, a second layer solution on Ethereum, or Binance Smart Chain, which is heavily pushed into the market by Binance. And from there on, we understand ourselves as the partner in the background to help our customers to create the solutions, how to digitalize securities and to enter the world of blockchain. And from there, we provide the tech solution. And we also helped by the regulation, which came into place 1 year ago in the EU. And for that reason, we have applied for the German crypto custody license, which enables us to provide some kind of license framework to our partners so that they do not necessarily need to become regulated themselves. And that's a lot of money and time and effort that can be saved on the end of our partners. And from there on, we understand ourselves as not only a tech solution, but also a regulated solution that brings in regulation knowledge into the service and into the service of our partners. And currently, we are heavily used in the field of tokenization, but also in the finance industry by banks and asset managers entering the market, understanding that Bitcoin, for example, is some kind of new asset class and can be addressed to value people and rich people. And for that reason, we address those two markets primarily, the finance sector and the tokenization sector. And we believe eventually those two markets will grow together more closely, not today, not tomorrow, but in the near future. And that is where the benefits of Tangany is provided.
Well, thank you very much. I think what we've established with this panel of CEOs and founders in the space is that we have a very complex ecosystem and that a lot of things come together and a lot of things need to be in place for our industry to take off. And what Martin just mentioned, regulation that have been put in place in Germany in the beginning of last year is very, very important. It basically in Germany triggered probably three dozen or more companies applying for a BaFin license to get regulated as a custodian. So we see regulation, it's not, especially for our industry, not necessarily something bad, but it triggers activity, it triggers companies going into the space. And I'd like to link that German custody regulation back to Richard and his approach with Abu Dhabi Global Markets to basically create some form of, I call it packaging, a digital packaging for security that enables it to be deployed, well, over several jurisdictions and at some point prospectively around the globe. Can you tell us a little bit more about that? So how does that work in practice? So basically to have a standard of a security that then prospectively in that packaging of a token you can trade in New York, in Abu Dhabi, in Sydney. How does that work?
I think in the course of our work, we discovered two things. I think the first thing is that we do need quite calibrated regulatory framework to cater to this new digital asset class and have slight differentiation between the traditional assets and these assets, right? So for digital assets, which encompass both cryptos as well as tokenized securities, etc. Firstly, the definition of which makes a difference, but the business model and how you do custody this space is slightly different, right? How do you make sure that there's proper custody, and how do you make sure that the cold wallets are properly safeguarded, etc., etc. The tech governance of that front are slightly different between this asset class and the traditional asset class. So we decided then to have a different regulatory framework altogether that is quite calibrated towards this asset class and make clear that we do regulate this asset class quite differently from the rest. And that gave industry participants some assurance that we do spend time and energy to understand this space, understand the needs of this space. And from there, we can work much more closely with international regulators that's trying to understand this space. And it's part of the education process, right? We regulators are always at least half a step behind. We try to keep within half a step behind. Some regulators more than half a step, I must say. But I think that interaction between ourselves and the industry is very useful. And ourselves with global regulators are very useful to bring everybody up to speed of how do we come together to support growth and development in this asset class, right? And if you do not have common methodology or common terminology in this space, it's going to be quite challenging, which is something that we are trying to get some firm commitment globally in that space as well. So there are issues, but with more education, with more awareness, some of these issues will be slowly overcome.
Absolutely. I'd like to come back and move a bit back to Asia and bring Mahesh back in. So let's look at the ecosystem of Hong Kong as an example. I mean, for a variety of reasons, interesting things are happening in Hong Kong. So we've been looking at Hong Kong Blockchain League for the last years, and you've had an amazing journey with labs and quite some success also just recently. So what's your perspective for this year going forward? What will work? What is working already? How is this going to take off?
There are a couple of interesting points I think Richard, Luke Graham have raised as well, Martin as well. Regulation is a very important element. I think that's really the crux of how any of these new ventures or new styles of ventures are going to be able to springboard into mainstream. The problem is really regulatory conversations. From us in Hong Kong, we say we can onboard investors or projects as long as it doesn't involve Americans, and we have to exclude that because of the compliance requirements that exist. And then when we try to talk to regulation in Hong Kong, it's a very slow and tedious process to really understand how we can move forward and accelerate our programs because we don't have regulation in place. Now, having said that, it is starting to change. There is a conversation as more businesses and more activities are taking place, more professionals like the esteemed panelists are involved. That's going to help to create some kind of a foundation to which regulation can begin to start to evolve. So a month ago, we had a crypto asset brokerage which was given a license, and that was a pretty sizable company to be able to trade or manage in crypto assets. This was a great breakthrough, but the threshold of entering is not available to the regular person. You have to be a professional. You have to have an asset value of over $8 million. You have to prove that you have that asset value to be considered as a professional, because if you're just a layman that comes off the street, there is a fear of repercussion of loss. What would that person who is not an astute investor be able to understand what's the growth of a business, and especially to do with crypto assets or tokens or STOs. So with this, I can understand there is a requirement in regulation to create a safeguard, but there is also a prohibition against entry on masses of people coming in. So you can buy Bitcoin, you can buy Ethereum, you go to the exchanges, which are varied across Asia, with the Chinese, with some of the other exchanges that exist in Hong Kong as well. But you're not really buying to the business. You're just buying a crypto asset and you're trading it on the exchange. When we look at labs, we're actually trying to build the business, and we do want to ensure that we do have regulatory framework so that we can provide those assurances to the investor that we are here as a sustainable business, to practice in a sustainable method, and to provide reporting as well as growth in our venture. So Hong Kong, we're lagging behind Singapore. Richard, you appreciate that, but we're lagging behind Singapore with Singapore government. I think it was DBS that allowed to start trading cryptos, but our banks in Hong Kong, we are not permitted. So you're still running off third party funders or institutes to be able to exchange your tokens and re-encash it back into fiat or whatever you may want to do. So why are we still behind that curve? And when Richard's saying, some places are half a step behind, I think we're a little bit more than half a step behind. Now, when we talk about fintech is a hot topic here. the banks, the government, everybody's on board. Even if we talk about certain different government bodies in Hong Kong, fintech is going to play a very, very large part. We've seen it with the way Alipay is accepted, WeChat Pay, Octopus, as we have in our card system, but there's still a fear of security. And the people using those fintech instruments still worry about identity, ownership of identity, loss of data, loss of information, theft, NFC theft, whatever it may be. There's still a lot of, how do you say, lack of knowledge and lack of knowledge in the security aspect. So I think we really need to be able to go down to the basic level of creating an understanding of the world that we're actually venturing into, which has to be blockchain based. Yeah. And I think if we go in that institute of blockchain, we have to be able to provide a knowledge center to which we can grow. Now, the problems I also see here is that institutes and financial institutes are very much in love with the traditional format of liquidity, being able to trade in an asset class that can provide cash almost instantaneously. So when we look at property is highly illiquid because it takes process, it takes time, and it needs a lot of money. So how do we create that speed of liquidity for asset class that is traditionally slow? And doing it on the blockchain by creating a token STO through NFTs, we feel we can actually bridge that gap of opening the door to investors coming in. And that's really how we're trying to bridge that learning curve here in Hong Kong.
Yeah, I think we can all fully agree on, well, let's say what you call lack of knowledge with certain traditional players that basically paint the picture of fear in front of certain things that could actually be solved with blockchain and its transparency and its technology. Some of those traditional players, and we have a couple of questions from the audience around exchanges. I'd like to give that maybe to Graham first and later on to Luke, because Euronext is also managed from the audience. Graham, how do you see, I mean, prospectively, looking down at these 2020s, at one point you're facing rather strong competition. So when, let's say, when NASDAQ comes into the game of security tokens, when the London Stock Exchange considers it, when finally Deutsche Börse or the Stuttgart Exchange and others in Europe come into the game. So how do you envision the space of secondary markets and exchanges? How will that develop, and how will we have coexistence of innovative new, basically private firms on the exchange market and then fairly traditional half public ones?
Yeah, thanks. So I guess you know, firstly, it's an over $1 quadrillion market that potentially is at play here, and by that I include every single instrument that's already out there, plus a lot of new instruments that previously people wouldn't trade. So the size of the market really isn't small, so we don't worry too much about the competition. But also I think it's not that this hasn't been tried by some of the existing firms already. Most of the companies, I'm sure, that Luke meets that come to him to tokenize and that approach us are largely defined as SMEs, i.e. those with a balance sheet of, let's say, under 200 million. So growth markets already exist. They're largely illiquid places anyway, and relatively unsuccessful compared to main markets. And the main reason I think for that, well, it's one of liquidity ultimately, but accessibility feeds into that. Most people concentrate on the main stocks, most tracker funds track the main exchanges. The growth markets, limited brokers, fairly inefficient. And so what people working in the digital security space have been able to do, partly being inspired by crypto, is rethink the way that those markets work. So rather than the case of a retail investor working through a broker connected to a domestic broker connected to an exchange and paying away layers of fees, people can just go and trade directly on a crypto venue. And so, even though they're unregulated ICOs, you see a lot of people interested in trading when they can go straight to market. And we've also seen it in the US recently, obviously, with lots of retail going directly to market. So The way that we compete is addressing people that previously couldn't access capital markets because they were too expensive. Companies should have easier access to capital markets through digital. Investors should have more direct access, which will make it more efficient. And that's not to say that the big players aren't interested in this space, but you know, SIX have been working at it for a while. LSE have been in the sandbox, ASX, Toronto, pretty much all of the exchanges have been looking in the space, but none of them have really been embracing the lower end of the market. I'd say that their play is more at looking at how do we change the CSD to digital, how do we change our existing records to blockchain, and then there'll be a point of inflection where every security on their books overnight will flip to being a digital security. So I think what you'll see is that companies like us, like T0, like the ATS securitizers recently launched, like you know, anyone embracing this digital space will actually start capturing companies that previously didn't have access to the markets, whereas everyone at the kind of more liquid end of the market will eventually just move over to digital with the current incumbents.
Yeah, very good. Thank you very much. We have an add-on, and I think I'd give the next one to Luke. One is, do you want to comment on your investor Euronext, what they are planning in the game, or do you feel comfortable to answer a question from the audience, what Euronext is playing in the field?
Yes, I can give some elements. I think it's very important to have that kind of big players involved in the tokenization space. So that's why they became one of our shareholders, because we need credibility in this ecosystem. So Euronext, they are active in public markets. So everything listed on a public stock exchange, that's what they do, where you need to settle in a CSD, etc. So it's the main market today. But you also have private markets. So everything else, like private equity, closed-end funds for real estate, for example, a lot of commodities, private debt. All of these instruments are very hard to find for investors because there is no infrastructure. Euronext, it's an infrastructure. It's a market where you can go if you're authorized to do so, and you can trade financial instruments. For all of the financial instruments that you cannot find on this public infrastructure, publicly listed, you don't know where to find them. And when you find them, you have no way to, it's not accessible. It's very hard to invest and to exit, to manage your portfolio on the long term, because you don't know where to find another counterparty to sell your assets, to buy new ones, etc. So we think blockchain and Euronext is sharing this vision. Blockchain can be this infrastructure where basically private markets could work, where a whole ecosystem could share this shared IT infrastructure and start proposing assets to new type of investors that are not the big financial institutions, but investors who are interested in investing in this assets, and who can usually not afford to wait for 5, 7, 10 years in their investment. So Euronext is bringing credibility, and they see tokenization as a way to increase their footprint in private markets where they are not that much today. And if we check the parallel with NFTs, it's the same. I mean, the NFTs technology, the smart contracts, exists for 5 years, I think, this standard. But what the market was needed is Elon Musk or Jack Dorsey to say, I'm using this technology, and because it's my NFT, it's valuable. It will be the same with security tokens when we'll have a big entity and big players saying, we respect this standard, and that's how it's going to work. It will emerge very quickly. And that's what we have seen these past few months, is that every big financial institution is working on digital assets projects, starting with cryptocurrencies, because they cannot wait anymore. They have too much pressure from their investors. And the next wave will be security tokens, when investors will realize that it's a way better form to manage securities. You can get a lot of benefits from that. So Euronext is very active, actually. They are central and neutral in the market, but also they have the lucidity to realize that it's another market. It's for private markets and not for public markets, because the regulation for public markets replace basically a CSD by a blockchain is not there yet, and it will not be there for a few years, I think.
No, no, absolutely. At this point, before we open up to more questions from the audience, so I encourage everyone who's listening in to use the Q&A function at the bottom. Martin, maybe from your perspective on the industry. So in the end, this ecosystem will breathe liquidity and will need investors, and those investors will need solutions how they deal with the assets they are holding. So very specifically, what kind of players do you see moving both into the markets, both of crypto and tokenized securities, and getting ready for that game, be it institutions or individuals? Can you tell us a little bit about that?
Yeah, sure. Well, what I can tell you the most is, of course, the German market, and I believe the European market as a whole is very different in that approach, and the German market is maybe 1 or 2 years behind the Switzerland market for comparison. But since 4 or 5 months from now today, we have seen an increase of requests from banks, mostly private banks, digital banks, and smaller banks, who are seeing that the market is changing, especially here in Germany. There's the crypto security upcoming, which is the first security which is fully regulated based on blockchain, which will change a lot, because until now it is not possible to issue a security digital way. It has to be a physical way solution, and that will change a lot of things. And I believe banks are realizing now slowly that the market is changing in the next 10 years, and in the end, in 2030, there will be no longer physical securities, and banks are realizing that, and they are looking on the market. How can they change and adjust to that change that is currently happening? Because what we have seen, banks or asset managers usually do not have the resources or the competence to enter the blockchain market on themselves, to create their own solution and to be on the forefront of the tech innovation. But they rely on technical solution providers like Tangany or other solution providers, and they're buying or purchasing that kind of solution to be ready and to be able to enter the world of digital assets. And that is something that is coming, and we see it in Germany, especially with the crypto asset security, which will be, in my opinion, huge, starting with different areas that can be digitalized in the first place, and then with the upcoming regulation in Europe, hopefully with MiCA, the PODO to MiFID regulation, that will allow eventually all players to operate across Europe, which is very important in my opinion, because it's currently there are silos. You issue in Germany, you have issue to place your offer in France or in Luxembourg. So the market is highly fragmented, and I don't believe that is the way how we bring liquidity into the market. To get back to your question, so we need a European market, not in German and Luxembourg and Austrian market, but in real European market, harmonized market. And from there on, we are able to bring in the liquidity providers, banks, asset managers, the people who have the money to really benefit or to really contribute to the system, because currently there are still a lot of ICOs ongoing and security token offerings and other forms like NFTs, but still they're all fighting for the same amount of liquidity in the market, and we need to broaden that pool to be able to digitalize more assets in the market itself. And I believe it's very important to harmonize everything on a regulatory aspect, but also to simplify the tech even more. It's not about blockchain, it's about assets, and therefore we have to move the blockchain further in the background. And that is exactly what we at Tangany understand our role to be, the enabler to take care of the complexity and legal complexity, but also tech complexity, and to really simplify everything. It needs to be as easy as possible, that everyone on the bank side or on the asset manager side understands how it works and can enter the market with like one button click. And I believe that is the road where we are need to go, and we're heading that way, but it still will take some time.
Yeah, definitely. Well, our take from like Manta's perspective is that once this ecosystem, which we're describing today with its different players, is really in place and functioning, then actually we won't continue to fight for the same liquidity, because then the stream of liquidity will be much broader, and we will see completely different players coming into the market and investing in securities on a Tokeny platform, or trading, buying securities on an exchange like Archax or on our platform. So we will see a completely different space in a couple of years from now, or by the mid of this decade. There was actually, both Luc and Martin, you mentioned NFTs already. So we've seen the ride of Bitcoin in the last month, and now recently through the likes of Elon Musk and others, we've seen the rise of NFTs. Open question to the panel: who wants to take it? How do we look at NFTs now?
Well, from my perspective, I'm still a bit skeptical about NFTs. I believe they were already here 4 years ago with the last Bitcoin hype. I already have read about NFTs back then, 2017, and now they're back again. I believe they have a little bit matured, but it's still so much unclear. So who is the one who can tokenize NFTs? Who has the rights to do that? I believe there was an NFT for Batman or another comic superhero, and the people, they don't have the rights to do that because they're not the owner of the superhero, but still it has been done and it was sold for several million euros, but everybody is able to do so unless the right owner charges any use on that. So there's so much unclear and unregulated that I'm not confident that NFT is already qualified for regulated players to be traded and used, because it's so much unclear and there's so many risk inherited into NFTs that I believe it still is on B2C market, and it's quite heavily used on the B2C market, but not yet on the B2B market, in my opinion.
Yeah, and I think it also shows that there is a market for unregulated things. I mean, I'm saying that we are in the business of doing regulated stuff. So we are regulated by BaFin, we are under oversight by the German central bank, and we'd like to play the regulatory game. Nonetheless, we see phenomena like NFTs, and obviously, I think these people are aware of what they are investing in. Let's at least hope so. But it's interesting to see how this can take off. There is one more question, very specific. I could also add something to that, but I probably give it to Richard again. Someone is asking about cross-jurisdiction trading of security tokens. So in short, how does this happen at the moment? So someone issues a security and it's offered in several countries. What is happening there? And then later, maybe an add-on to the question: how is cross-border trading happening? What are the aspects of it?
I do think that if I can address that question, if you talk about securities tokenization, it is still very much, the way I look at it, is still very localized in the respective jurisdiction, because you do have local rules and regulations of what is defined as securities that you have to comply. You have your investor pool that's more familiar with the asset, unless it's a global asset, where you can do global offering. But most of the asset classes, if you talk about that I've seen securitized, are mainly local assets and where local investors are more familiar. So cross-border offering is not that common as of now, unless you're talking about tokenization of, let's say, a private equity fund that's very well known, and you bring liquidity into that private equity asset, or a venture cap fund, etc., right? So I think one of the key challenges of tokenization of securities that we currently see is that investors has not gotten the confidence which exists in public markets. So when security is brought to the public market, it goes through due diligence. There's a set of sponsors and investment bankers that work to make sure that, for example, if you're talking about property developer, it has the expertise, it has the rights to the property, etc. Right? There are trading events in terms of quarterly results. There are analysts following the counter that provide trading events, and you bring liquidity into a counter. Right? How do you emulate the same environment for some of these non-listed securities? I think is an issue, right? How do you bring confidence into the asset class? Is there an issue that most of the operators have to overcome in terms of their business model?
And Christian, if I may just add to that for a second, there's a few different areas that we have to look at from Archax's point of view. So from a venue point of view, there's nothing preventing us really from having foreign issuances trading on our platform. BaFin and the like might have local custody rules, but generally speaking, there's nothing in UK regulation prohibiting us. There's some structural issues around settlement in Crest and depository interests, but all of these things exist in the traditional world. The bigger issues come from when you're promoting securities out to different jurisdictions. So, you know, an ICO can be promoted globally to practically anyone. When you're out there selling securities, it's much more of a challenge. So we may be able to find a company that wants to tokenize. We may agree that it's a good company. We do perform the due diligence on them and require all of the types of reporting that Richard says, but that doesn't mean that anyone from around the world can come onto our venue and trade it. We need to look into reverse solicitation, into marketing rules, you know, to make sure every security can be traded properly. So as part of the reason why this is a difficult journey, because everyone looks at crypto and goes, oh, look, these platforms are global, they're really accessible, this should be straightforward. And then, you know, kind of we come along with regulated hats on and suddenly it's a lot slower and a lot measured. But what's critical is that over time, what you'll see, and I think Martin or Richard mentioned it earlier, is that you'll start seeing these smart contracts adapting to the regulation. So it will know who's trading it, which jurisdiction are they from, who does the reporting have to go, who does the reporting have to go to? When there's corporate actions to be made, when there's dividends to be made, they can all be made on chain. So it's going to take a little bit longer to do everything in line with the regulations, but we will get there.
Well, no, absolutely. So I'm looking at the time, and we are almost finished. We managed to take some questions from the audience. I encourage everyone to reach out to us if we didn't get this done. You can always contact us at contact@Manta.capital. We can also forward questions to our esteemed panelists today. But I'd like to do one final round, and it's so let's beam ourselves to the end of the year, New Year's Eve, 2021, and we are looking back at 2021 and the security token market. What will be interesting things this year that we talk about in December at the end of it? I start again with Hong Kong and Mahesh. What's your take on it? Like, I would say 1 minute each in respect of the time.
Very quickly. I do believe in this space wholeheartedly. I think where we're going in terms of security tokens, in terms of creating a token activity for businesses is really the most important step that's going to happen this year. For myself, I look at two mainstream activities. One is the property side of it. The other one is agriculture. If we bring these two elements into the mainstream of an Asian understanding, I think there's going to be a lot of regulation that's going to support it, because these are two very large asset areas that involve land and properties as well as sustenance. I think these two areas are going to help springboard an interest that's going to cause for regulation to actually assist in companies wanting to look into this arena. So I'm very bullish. I think I will be active as possible in assisting Hong Kong government as well as the Asian environment to understand this space and to help allow it to grow and flourish.
Thank you very much. Richard, you next.
Sure.
What's your take?
I do see a greater proliferation of central bank digital currency this year. I think that's going to take off. I do see a much greater proliferation of using of digital currency for payments, which we are seeing across the world. There's going to be greater institutional adoption. And for tokenization of securities, my wish is to see greater standardization and harmonization of standards across the globe, greater facilitation of issuance, and I do hope to see much more exciting product class and good assets being securitized that will give investor greater choices.
Thank you very much. Luke, what's your take? What's going to be the biggest news in 2021 in our space?
I would love to see big financial institutions launching a digital asset marketplace based on our standards on the TRX protocol. Why? Because we cracked identities. We are going to launch secondary market solutions in the upcoming weeks. We cracked the custody for security tokens. We're with our friends from Tangany. So now we have all of the building blocks. What we need is a big entity coming and saying that's how it works. And very quickly you will see issuers coming, probably in the real estate space, because real estate you can give a price on real estate assets. And once you have real estate tokenized assets, you can use them for the whole DeFi ecosystem, for collateralization, for many things. The missing part is the stablecoin, but once again, we have the technology to create stablecoins. So what we need is a bank, a big financial institution saying that's our stablecoin, and you can use it in this interoperable ecosystem. So now that we have all of these bricks, I hope that some big financial institutions will move, take a little bit of risk just to prove that it works and that it can be compliant. And also it's commercially interesting for Tokeny.
Yeah, I'm pretty sure this will happen. We already see some interest from very traditional players, and we'll see movement there this year. Graham, what will happen on Archax in 2021? What will be in the newsfeed?
Yeah, I think kind of echoing what everyone else has said. Really, I think Luke's right. Actually, in the recent days, we've seen Morgan Stanley stepping into offering some of the Galaxy products to their clients. You've seen an increased number of institutions having trading desks. I think crypto was a bit of a reputation risk for the big institutions a few years ago, and securities weren't. And I think the gap between them is narrowing. Crypto is becoming increasingly regulated. I think you will see regulation coming slightly into innovation like DeFi. But I think you will start to see kind of crypto and securities be kind of more hand in hand. So where I hope that we'll be by the end of this year is we'll be one of the first venues where you can trade both securities and cryptocurrencies, perhaps as securities, either through exchange traded products or wrappers that allow people that aren't familiar with crypto to still get exposure to the asset class. So this will be the final year of starting to get the right pieces in place, and I think you're going to start to see some seismic shifts next year.
And Martin, your perspective from Munich, what are we going to see?
Yeah, well, I believe this year we have a lot of hot topics, a lot of things are happening currently. And at the end of the year, from the Tangany perspective, I believe we will discuss the impact of the upcoming crypto security, which is a competitive solution to security tokens, highly regulated, highly usable for regulated institutions like banks or asset managers. But it also comes with a lot of requirements and obstacles that needs to be solved still. And we have to see how that new product will work compared to security tokens, and how it might be able to be advertised and promoted across Europe. Is it limited to Germany? What does it mean for the industry? I believe that is a very, very hot topic for the German tokenization area. It might be spreading across Europe. So yeah, we need to achieve or to aim for standardization and harmonization of regulation in Europe. And that is one brick that is pointing in another direction. It's only a German view and a German approach. And I'm hoping that it will be included in the EU regulation, like on MiCA level, but it's still unclear. And I believe that will be a topic we will discuss a lot in the German market, at least.
Well, gentlemen, thank you so much for today. We have been excellent in timing. We've just done it in 60 minutes. And yeah, thank you to our audience for listening in. We have another BMCP Live next month, actually, probably about the topic of staking in April, and in May we'll join up with the Irish Blockchain Week and talk more about property markets and so forth. So thanks again. Have a good night and good evening, everyone.
Cheers. Thanks, everyone.
Leave Mahesh to his whiskey time, and
everyone.
Thank you so much. Thank you so much.
Thank you.
And
thank you. Bye-bye.
Have a good evening. Thank you.